Yes, good morning, students, and welcome to the class of SAP. We have with us here Nagraj sir. Good morning, Nagraj sir, and a warm welcome to you, sir.
Thank you very much, madam. Good morning.
Yes, sir. You may please start the session, sir.
Sure, ma'am. Yeah. So, dear students, very warm welcome, a very good morning. So, the first class for this week has started, and you all know, as and when you have questions, just put it up in your uh, Q&A section. All right. Now, we were discussing something very interesting as regards the how exactly, what are the different kinds of projects you will come across in SAP, and how is or what exactly, probably if somebody is exposed to a programming language, they would be aware of something called as SDLC, software development life cycle. So similarly, even your SAP does follow certain steps, okay, which sequentially arranged steps which have to happen necessarily in the same order. All right, so that the final implementation is successful. Click. Now, what happens in a and what are the kinds of, okay, I'll come back to this later. I hope the concept of documents splitting was clear, and about the we also discussed the last day, even before we wound up the session for the week. We also discussed about the ARA, I mean more of AR, because we had already had uh, a good coverage of accounts payable. Now we have accounts receivables. So we discussed what is a cycle called as a lead to cash, or maybe in your ECC terms, it was order to cash cycle. And earlier, when we spoke about the accounts payables, it was in ECC, it was called as P2P, procure to pay or purchase to pay or whatever. And in the HANA environment, it is called as source to pay. All right. So lead to cash, source to. So we will definitely discuss these cycles in detail. Maybe probably say by I think next week, I think we should be ready with the concepts of integration. Very, very interesting, right? Okay, coming along. Just like we had, or rather we categorized our vendors into imports and local, or maybe say based on the geographical location, based on the business volume. The same logic applies to your customers also. Absolutely no difference, right? And just like you had the master data broken up into a couple of views, the customer master data is also broken up into the general view, the sales, the finance view, and the sales organization view. So in the uh, vendor side, we had the general information, the finance related information, and the material management related information, the purchase organization. Here we are talking about the sales organization. Typically your sales related information, sales department related information of the individual customer master data. And the individual vendor or the customer master data, they are also referred to as subledgers in SAP. in HANA as well as in the earlier ECC system also. No, absolutely no change in the nomenclature. No change in the names. Clear? They are called as subledgers. And one more important point what you need to understand is how the finance module is talking to the individual submodules. No doubt your accounts receivable and your accounts payable, they are the individual submodules under the FI module. So how is the information flowing within the modules? So integration is your basically we speak about the integration with two different modules, but here you also have the integration within the module also. That is within the finance, you have the finance and the AR submodule or the AP submodule talking between themselves. And how do they communicate? They communicate through the reconciliation account. The reconciliation account is nothing but a simple general ledger account created in your operational chart of accounts. Clear? So you are connected. What happens if you do not connect? Suppose you have a question. What happens if the individual customer or the vendor is not connected through the reconciliation account or through the recon account? In SAP, we also call this as a recon account. Okay. What happens? The answer is very simple. No transactions takes place. Absolutely no transaction takes place. Either the finance related transactions or the integration related transactions, both of them will not happen. Why? Because what is the role of the reconciliation account? The role of the reconciliation account is to accumulate the balances of your individual customers and vendors and put it in the sundry debtors or in your sundry creditors figure. This will not be achieved. Yeah. Especially when you're talking about from the integration perspective. When you're talking from the integration angle, this is not at all possible. This will not be possible until and unless you connect the individual customers or the vendors through the reconciliation account. Here, what am I talking? I'm talking the link within the module. I'm not crossing the finance module. I am talking about the integration within the FI module. Okay. Now, we also spoke about the partial and the residual payments. So what was the example? Let me assume that I have made a sale for 1 lakh rupees. I have made a sale for 1 lakh rupees. So the customer is paying me 65,000 rupees for that particular invoice amounting to 1 lakh rupees. I have a payment being made by the customer for 65,000 rupees. Normal business scenario, right? Not special to SAP alone. This normally happens even in the business, whether SAP or non-SAP. Now, how does the system behave when you take care of this transaction either through the partial payment methodology or the partial payment option, And how does the system behave if the user who's recording this payment, or rather who's recording this receipt, is using the residual payment methodology or residual payment option? In case the end user is using the partial payment method to give effect to this transaction, in your SAP system, both these items will be shown. And how will they be reflected? They will be reflected as the open items. Both, but the balances would have changed based on whether it is a. So what does it do? Customer, it shows a debit. It shows a plus balance. Just a moment. In your SAP, this will show a. This will show the. Your SAP system reflects both these items. Customer account debit to sales, that is the entry. Why it is showing 1 lakh is showing a plus. Okay. And 65,000 rupees is the receipt. I've written it down in the left. Amount receipt. Now, when the user uses the other way of affecting this transaction, there are two ways of making the SAP system or recording this transaction in the SAP system. One is your partial payment option. The other one is a residual payment option. Clear? Now, what happens if this transactions of the installment payment gets into the residual mode? Both these items will not appear, but the balance of only the open item, sorry, only the balance of 35,000 as an open item will be shown in the system. The system won't keep the track of both these. Clear? When you follow the residual methodology of receiving this payment, part payment. Clear? Typical life scenario. Clear? Now, so you always have, I mean, see, so we spoke about balance confirmations. This also is very much available in the customer side. So we saw the balance confirmations from the vendor side. Same concept is available even in the receivable side. Another interesting feature, just like the accounts payable had an interesting feature by the way of automatic payment program, your customers or your accounts receivable, they also have a very, very interesting concept called as dunning. Dunning. So we have a process, an automatic, just like we had the automated process of releasing payments to the vendors. Here we have the automated concept of reminding the customers for their outstanding payments, outstanding receipts. So we are reminding through the dunning process, we are reminding the customers that they are owing us this amount. And the whole process is being automated by the finance consultant. It is configured in the system by the finance consultant only. Nobody else will be responsible for these two processes. What are the two processes? Your automatic payment program with regards to your payables, your dunning procedure or your dunning process relating to your customers. So what does the dunning procedure, what should it involve? So the first and the most important thing, it should consider the invoices which are overdue, the sales invoices overdue, they are crossing the payment time or the receipt time. And suppose I have given the customer a grace period of say 2 to 3 days. That also must be considered. The system should also consider the grace period allowed to a specific customer within which even after the overdue, the time is actually over. Okay, and the invoice is already due. But again, since I'm a little lenient, I give it say 3 to 5 days time grace period for the customer to make the payment. So the system should consider that. Just like in your automatic payment program, what did the system consider? The system considered the discount and also the credit time. What you and your vendor have come into a understand. So similarly, in your AR process, in your dunning process, the same thing should be considered. So what is the credit time that you have given your customers? And also to block the dunning procedure itself. Why block? So now what is the process? You are setting up an automated process to remind the customers for their overdue receipts. Perfect. Now, do you constantly keep reminding your customers? If at all you're dealing with a very, very important customer of yours, he will be very irritated to get constant reminders. He doesn't like to be reminded that he needs to make the payment. So for such customers, I can block the procedure from happening. I may not allow the dunning process to happen at all. So this also is very much possible in your SAP system. Just like we block the payments to the vendors, in this case, you are blocking the reminders to reach the customer. The system will not even pick up these customers for reminding them. And we also read in the statement, or rather in the study content, that SAP allows you a maximum of 9 levels of dunning. What is 9 levels of dunning? SAP allows you a maximum of 9 reminders to go to the customers. But just imagine a scenario where you're reminded 9 to 10 times, n number of times for something. Won't you get irritated? Same things happen to the customer also, right? So normally in the live, we have not seen maximum of 2 to 3 levels only. Maximum is 3. We have not seen more than 3. Even in our practical implementations, we have not seen the dunning level reach greater than 3. We have not reminded the customers more than thrice. Why? This process, you may be surprised that this process is considered so very serious, especially when you're talking about the European projects. When the Dunning level reaches the third level, immediately the organization which is expecting money from the customer puts up a case in the court. Immediately it goes to the court. Just imagine the seriousness. The matter, if I remind the customer more than twice or even thrice, the matter immediately reaches the court. And they will have to settle in the court itself. Such is the seriousness of the third level of Dunning. And we have seen this. We have practically experienced this in our European projects. Clear? So normally, practically, we have the Dunning system being designed by the consultant not to have more than 3 levels. Clear? Another important concept, what we understood or what we touched upon in the first half of Friday was process of down payments, process of advances. Okay. So what is down payment? What is the concept of advances? Now, you are interacting with your vendor and your customer. You are buying raw materials and you are selling the items. So you are interacting with your customer and you are paying to your vendors and you're receiving money from your customers, credit memos. All these things are your normal transactions. But when you're talking about, say, concepts like your rental security deposit, your security deposit, your advances, your bank guarantees, all these transactions, they are treated in the SAP system by the means of this. These transactions are referred to as your special general ledger transaction. Now, how does SAP understand the difference between a normal transaction and your special general ledger transaction? So for the SAP system to understand, okay, you in the sense the consultant needs to create a new reconciliation account for the special general ledger transactions. There could be any number. All right. Now, what is a process? So it becomes the responsibility of the finance consultant to generate or to create a new reconciliation account in the SAP system, similar to your normal reconciliation account. You're able to understand? So on the similar lines, the FI consultant or the finance consultant creates a new reconciliation account for the system to accept the special general ledger transactions. So let us take advances received or advances made, how it is being treated by the SAP system. First and the foremost thing is, this transaction, it is called as a noted item. It has 3 steps. First of all, just like you're requesting for the advances, you have this being created in the SAP system as a noted item. So what does this indicate? This noted item is just as a informatory uh, informatory lines in your financial statements. Just like when you see the typical balance sheet, at the end of the balance sheet, you will have some points. All these are noted items. All right. They do not have the financial impact. It is just an information. You got my point? So such things, they are referred to as noted item in SAP. Now what happens in the second step? The actual transaction. What do you mean by actual transaction? The advances received, or I make the advances. I pay, I receive money by means of advances. The actual transaction takes place in the second step, the down payment steps. Second step in the process. Now, how is the advance cleared? How does the system understand as to when I should clear the advance? The poor system should know, right? Because it cannot keep having these advances forever. At one time or the other, the advances need to be settled. So how do I settle the advances? Either paid or received. So what do I do? Suppose I receive money as advance from the customer. How do I settle this advance? I sell the product. I make a sale transaction in the SAP system, and I connect these 2 points, the down payment and the settlement. I'm connecting the sales invoices to the advance transaction. The transaction which I recorded, that I have received the advance, that transaction I am connecting it to the invoice which I'm generating once I sell a item, and I connect this to the advance. Whatever I receive from the customer, I make the system understand that it is for this particular sale transaction that I am connecting this advance. So this was about the concept of the down payment. After which we touched upon a very generic subject in the second half of our discussion. In the last hour or so, we had a how exactly, what is the life cycle of an SAP project? Okay. Now, how does it start? Now, what are the different categories of projects? What are the different kinds of projects? We have the implementation projects, which we start bringing in SAP from the scratch. We have upgrade projects, where the version of SAP has changed and we need to move to the higher versions. So we had, I gave you an example when we spoke about the architecture, from R1 architecture to R2 architecture, from R2 architecture to R3, and from R3 architecture to SAP HANA. Now we are talking about HANA. Yeah. So this is your typical example for your upgrade projects. The rollout projects. What do you mean by rollout? Change in the concepts. For example, we had the VAT system of taxation. We moved to the what system? GST. Yeah. So this movement, this typical movement, so has a whole module changed? The whole finance module, has it changed? No. It is only the taxation side of the finance module which has changed or which has transformed. This is the typical example for your rollout projects. Okay. Now we have the support projects. What do we mean by support? The SAP software has been implemented in my implementing partners company, and they have started using they in the sense the employees of the implementing company, they have started using the SAP system, and during the course of the usage, while they were using SAP, they had some errors. So who's going to rectify these errors? After implementing, I simply cannot walk off saying that my job is over. No, it can't happen like that. Invariably, you need to have a dedicated team as a support team, as we call in SAP, to help the end users or the employees of the implementing company to resolve their day-to-day issues. Suppose I'm an end user, I'm entering a purchase or a sale invoice. I get stuck. I'm not able to move forward because there is an error. There is an error in the SAP system. So I do not know how to resolve. I'm just an end user. So on whom should I rely? Whom should I get back to resolve this error? I need to definitely have a support team to which I can get back to. Now, typically your exam. Now, suppose if you have any issues as regards any, say, let's say any access or something, you write a mail to the support team, right? Same thing happens to your SAP project also. The end users raise the issues, and these issues, they are called as errors or issues or tickets. They can be called by any name. Okay? Normally we use the term tickets. Right now, let me come back to this a little later. Let me just refresh your memory for as far as the now, whenever we talk about the SAP implementation projects, the life cycle starts, or the first step for you to enter into an implementation project in SAP is your requirement gathering phase. Your your initial preparation or your requirement gathering phase. What exactly happens in this step? This is basically a very high level discussion where both the companies, the implementing company and the company which wants SAP to be implemented, the implementing partner, both of them, they discuss. They enter into a discussion, the top level management, as to what exactly is required by the company, what SAP can actually deliver. Okay, how can SAP improvise my profitability or my productivity? What is that extra what I can achieve by having SAP in my company? So like this, so many points are discussed. So basically, as an implementing team, the team which implements SAP, I study how the business is currently working. What are the steps? What are the procedures it is following? What is the business processes that it is following? And even before this, all the feasibility study is also carried in this discussion is carried out in this particular phase. Meaning, does this business really want SAP? Meaning, I match my turnover. If I'm investing more on SAP than my turnover, is my business investment wise enough? Do I really want SAP at that moment? And what is my return on investment? In how many years am I going to get back my investment on SAP? How quickly can I get it? So these are the discussions, these are the points which have to be considered by the implementing company. Okay, so I, as a company which is going to implement, I study the business. Okay, and I know what is being conducted and how things are happening in my new organization. And I, as an SAP expert and as a business analyst, I, in the sense, not a junior consultant, but senior team lead or maybe a senior consultant, the team leads, project managers, they are involved in this discussion or maybe even higher. So the SAP expert team then, after having analyzed the business as it is, now will advise the implementing partner about SAP, what it can achieve, how SAP can do better, in what areas do you suggest improvements, how can SAP deliver these improvements. Correct? This is what is expected by the implementing partner, right? Now, in some cases, SAP may not be able to deliver the solutions, okay, in the way as is required by the implementing partner. So what must it do? It must alternatively find a solution, right? I, as an implementing company, should identify a solution, right, for this particular issue. This analysis is called as a gap analysis. That is what SAP can deliver and what is expected by the implementing partner. If there is a gap, this is referred to as the gap analysis. And how do I narrow this gap? Where are the gaps? And I, as an SAP expert, how would I address these gaps? How would I resolve these gaps? Is the solution what I provide to the implementing partner. Now, the first step of the SAP project has happened. So both the companies are happy and they have decided that they have to go ahead with the SAP project. Now, as a second step, what is the second deliverable? Now, a document is prepared in the second phase of the project discussion. There is a Bible, which is called, this is also called as a Bible of the project, This is called as a business blueprint. Now, what exactly is this document? This business blueprint is one of the most confidential reports as far as the SAP implementation is considered. Right now, what does this contain? It is actually a huge documentation which contains step-by-step discussion as regards to implementation. The step-by-step discussion in step number 1, the detailed discussion which has happened between the top level managements. Okay, they are documented. The points are actually written down. And the most critical thing is your both the parties, they sign on each and every document in your blueprint. Yes, both the companies sign on each and every page of this particular document. Why does this happen? It happens because later, after we deliver the SAP product, they should not come back to us saying that, no, this is what we asked for and this is what you have delivered. There is something seriously wrong. And we should not say that this is what you asked us and this is what we have delivered. So in order to avoid all these discrepancies at a later point in time, we always fall back on the business blueprint for us to stay in line with the requirements and stay in line with what the implementing company can deliver. So both the companies, they are aware and they know what has to be expected. Clear? Now, the third step. Now, this is the action step in the sense, the final preparation phase. This is the phase where the size of the team, the size of individual module team strength. Suppose I decide, or rather it is decided that, see, as I said, SAP means not the implementation of the whole of SAP. That is highly impossible. That may not be possible at all. Right? So as a company which implements SAP, I understand the requirement of the company and I suggest that maybe a few modules can be implemented as of now. Like say finance module, the sales module, and the HR module. So let me assume that I'm not in the manufacturing side. Okay, I'm not in my implementing partner is not into manufacturing anything. He is into some service industry. So I need to implement SAP. Here. Now, what modules do I implement? What should be the size of the team? What should be the hierarchy of the team? Should I have one project manager? Should I have one team lead? Should I have how many consultants should I have? Clear? How do I set the budget? What is the budget? Clear? All these things they are discussed and the team is finalized. So once when the team is finalized, what do? I start converting all the requirements in your business blueprint into SAP. So whatever was there in the business blueprint, which had to be delivered, okay, I work on the SAP system now to deliver the individual requirements. This is your final preparation phase. So all the requirements get converted into SAP. Whatever the implementing company required, they get converted into SAP. Now, what is the most critical activity in this particular phase? This can actually be considered as another phase of the project, but I'm putting it in the final preparation phase itself. What do I mean by cutting over activities? Meaning, my implementing partner was using another non-SAP system. Okay. And now he wants to get into the SAP system. Maybe say, I also put a date, I guess. Maybe say on the 15th of January 2026. So I have assumed that I will be taking this much of time to deliver SAP. Okay. So by the 15th of January 2026, I would be in a position to deliver the SAP product to the implementing company. All right. Now, once when this date is being fixed, under no circumstances this is going to be revised. The implementing team works day in and day out to meet this deadline. Clear? Now, in this phase, what happens? As I said, the first and the foremost activity is after. See here, the consultants, they are working on the SAP implementation also. And at the same time, they are also responsible for moving the non-SAP data to the SAP system. Understood? So whatever the system was used earlier to SAP, there is some data till the 14th of January 2026. Now, by the 14th, I should have compared the statements as delivered by the non-SAP system, and I compared that statement with the statement delivered by SAP. I compared both those reports. And are they tallying? Are they talking the same figures? Is my trial balance, which I drew from the non-SAP system as on that particular day, is it matching with the trial balance or the balance sheet or the profit and loss account? Is it matching with the same reports in SAP? Even before I hand over the system, I ensure that both the reports, they are the same. They are having the same figures. You're able to understand? Now, not only this, I also am given the responsibility as a senior consultant or as a consultant working in the project. I'll also be given, along with the system deliverable or the activities in SAP, what I'm responsible for. I need to train the employees of that particular organization also. Because how will, once I finish my job, I cannot simply walk off. You agree with me? So I would have to train the employees of the department for which I am responsible, for which I create a lot of documents, testing manuals, user manuals, training manuals. Clear? So all these documents, generation of these documents are also the responsibility of the consultant. I sit with the end user and show him how he needs to practically work on the SAP system once they go live. So even before the 15th of January 2026, I should have completed all these activities. And for each activity, there is going to be a strict deadline. Clear? And these deadlines have to be met under whatever circumstances I may be facing. It's actually a very, very serious role, this implementation projects. All right. Now, after we hand over the system to the implementing partner, what is expected? The support. And we know why the support has to be done. Why exactly the support function needs to happen, we all know. How does this happen? So we actually, the implementing company identifies a set of consultants who can take up the role of the support consultants. So after identifying them, we tell them all about the system, how the system was configured. Yeah, so that they understand the whole of the SAP system. And this is called as your knowledge transfer, KT. So we as consultants, senior consultants, we deliver whatever we have done in the SAP system to our support consultants. Yeah, this activity is called as knowledge transfer. Now, after implementing SAP, probably the users, they will start getting some errors due to something. While carrying out their regular day-to-day activities, the users, the employees may encounter some errors, may encounter some issues. We call these issues or errors as tickets. And while we discuss about the project also, we also discussed about these issues, how we structure this particular support team. How do we support this? How do we cater to the support role for the implementing partner? That is also one of the critical discussions, right? So after implementing, how do we support you? How is the after service? After sales, right? We have seen after sales service, something very similar. Whenever you buy a product, like say a water filter or whatever it is, you'll be getting some free services or something like that. So within 6 months, you have one service or something. So same thing, right? So you enter into these agreements and the timelines depending on the criticality of the issue. Is it high priority ticket? Is it a medium priority ticket? Or is it a low priority ticket? Right? So what does this priority indicate? Priority indicates the time by which the error has to be resolved. Meaning to say that the issue raised was very, very critical to the business. And that is the reason as to why this has to be resolved in a matter of a few hours. Maybe say 3 to 4 hours. Right? Especially when you're talking about payment to vendors. So what are these critical errors? Errors which can stop your business. We had one typical issue where the payment did not reach a vendor and the whole business came to a standstill. Okay, so nothing absolutely worked. And the medium priority, the issue which is raised as a medium priority, it can take maybe say 2 to 5 days. 2 to 5 days time it can take. Maybe 1 working week. You can take to resolve this issue for 1 working week, Monday to Friday. So you raise a ticket, you raise a medium priority ticket on Monday. Okay, you can resolve that by Friday. The same week by Friday, the user is okay, even if you resolve the issue by Friday. 5 working days. If the issue is raised on the last day of the week. So Monday, Tuesday, Wednesday, Thursday. By Thursday next week, you can deliver the solution. So there is an agreement as to how these issues, once they have got raised in the system, and how does the implementing team know about these issues? Say, suppose my implementing partner is in the US. I am sitting in India and taking care of the support. How do I know sitting in India and he is getting an error in the US? How do I know that he has got an error in the US? He raises a information or he raises a ticket. All right, he raises a ticket and where in the corresponding support tool, there are certain softwares used as support tools. Probably one very common thing is, just a moment. If somebody had heard about what is Solution Manager. Solution Manager is one of the most commonest of the supporting tools, what we have used. Okay, but there could be as simple as a mail also. Just by raising a simple mail, you can raise an issue. Clear? So this is what we discussed on Friday. Clear? Let me see if I have any questions. If I see any questions, let me just check. Oh, all attendance. Okay. Somebody needs to. Okay. I don't see any major questions out here, except for the attendance. So I hope now, even when, so the clock for the solution starts ticking from the moment the issue is raised. So there could also be an agreement that once the employee raises the issue in the ticketing tool, the concerned team, it has to keep the user informed within 15 minutes to half an hour's time after the issue has been raised. He needs to just have a feeling that, okay, my issue is being looked at. Even a slightest delay here also can lead to penalty. Yes, it definitely leads to it definitely leads to penalty. And from the moment the ticket is raised till the moment the ticket is solved, you have the time clock set within the ticketing tool so that it measures the life cycle of that particular issue. So how long has the issue taken to get resolved from the moment the issue was raised till the moment it was resolved. Clear? Janvi madam, can we take a break?
Yes, sure, sir.
Yeah.
So now it's 12 p.m. We'll take a short break of 10 minutes and we'll be back by 12:10.
Sure, madam.
Students,
Yeah.
just take a short break of 10 minutes and be back by 12:10. Thank you.
Thank you, madam.
Sir?
Yes, ma'am. Yeah, I'm ready.
Sir, yeah, we can resume the session, sir.
Sure, ma'am. Yeah. Just give me 1 minute.
Yes, sir.
So where were we the last thing? We had 450 or something, right? So we had just tried to get into the asset accounting, right? All right. Let me try to just let me revisit this. Okay, I had some things more to actually cover. Now, coming back to the life cycle of a project. Okay. Now, how does the life cycle start? I receive a error message. I am a consultant. I receive the error message from my implementing partner, from the employee. So it is belonging to my area, finance. I start working on the project. I start working on the issue. On what system do I suppose? Let us imagine a live scenario in the sense you have to say make a note of some information immediately. What do you do? So you would always have a scratch pad or somewhere where you can make note of the issue. So even in SAP, your systems are arranged in a typical way, in the sense it is called as the how the systems, how the servers are arranged. It is called as the, you can also call it as a server. Now, I, as a consultant, how will I know the issue? He has reported, the end user has reported the issue. So I would actually start building up the solution in something called as a scratch pad. I can have a sandbox or a sandbox server or as a development server. Okay, so I design the solution in the sandbox or the development server, one of the clients, testing clients. So we are aware of what is a client now. It is a system allotted to me in the SAP environment. All right, I'm just a moment. All right, now I have a scratch pad. I have some temporary place where I can work out the solution. I develop the system, I develop the solution, and how will I let know the end user who has raised that issue? How will he know about it? So I have the concept of moving the solution. Whatever I have worked should move, the solution should move from this place to something called as the quality box or the quality server. So here it is the space by the consultant. Here the consultant uses the space, the development server or the sandbox server, develops the solution and hands over the solution to the, or let the end user know that he has developed the solution. Okay? So your solution, whatever you have provided, moves from this particular testing server, or rather your testing server, to the quality server. So the consultant will not have the access. Now probably you may get a better understanding of what is a client. The consultant will not have access to the quality client. Vice versa, the end user will not have the developmental access. He will not have the access to reach the development server, the space of the consultant. He will not be in a position to use it. Now, ultimately, when the end user agrees that, okay, the solution is all right, and this can be moved to the live system. This is the place. The live server or your production server is a critical space where you have the data of the company. And this is the place where all the end users are carrying out their day-to-day operations. I hope you got this. So any project can have 3 clients. One is your development client, which the end users will not have access to. Let me repeat. Quality client, or the quality server, or the quality box, for which the consultants would not have the place after the project goes live. And finally, the live or the production server, where all the active data is available to the concern, to the top level management of the implementing company or the implementing partner. This system, this arrangement of the development, your quality and your production server, the arrangement is called as the concept is called as landscape or landscaping. So if somebody asks you a question as to what you understand, have you ever heard of a term called landscape? Yes. What is it? It is nothing but the arrangement of the project's servers. So did you understand? Or so any further information about the projects? I don't know. I feel that I have not skipped any of the information. This was the last part of the development. I mean, SAP project development. Yeah. So this is your arrangement. This is your server arrangement. Okay, and which is also called as the landscaping. Nothing but the geography of the project. Clear? I will just take a breather for 2 minutes. Try to regather your thoughts and come back to me with questions. Okay. I'm very much there. Okay. Regather your thought process and ask me questions.
Sir, there are no questions right now.
Okay, ma'am. Okay.
Yes.
I've just given them 2 minutes time to think whatever has happened.
Yeah. Students, if you have any query pertaining to the topic, please mention it in the Q&A section.
Take 1 more minute and then we will continue with our discussion. So with this, or rather I conclude with the topic of the SAP project life cycle. Okay. In the ECC, it is called as ASAP, Accelerated SAP Methodology. All right. In HANA, it is called as the Activate methodology. It's almost one of the same steps. There is absolutely no major changes, except could be the English. All right. Or rather, I mean, as far as the steps or as far as understanding is concerned, no major changes. All right. No major changes as far as the content is concerned. The same way it happens even in the HANA. In the HANA methodology, also in the HANA SAP, same things happen. Just give me a minute. So sorry. Yeah. Let me just have a glance at any questions you have. No questions, I guess. Okay. So I'm assuming that there are no questions. Yes, there are no questions.
So there
Yes,
is one question.
Which one, madam?
Please explain the last part of project development again.
Please explain the last part. What is that last part? You mean to say the landscape concept or?
The student, please explain that.
Okay, I will take this up. I will explain the last part. If you're talking about the steps, if you can clarify what exactly you meant, and if you want me to explain what is go live is the date by which you are moving on from the non-SAP environment to the SAP environment. That is, till now, you are working on a non-SAP platform. Now the implementing company wants to start to carrying out its day-to-day functions on the SAP system. Suppose you are entering invoices. You were entering it in a non-SAP system earlier. But once you go live, you are actually stopped from using the earlier system, and you are supposed to carry out all your day-to-day transactions on the SAP system. Clear? Did you understand? Was it what you expected? Or if you can clarify your question, I'll be more than happy. Or if you want me to explain what is the landscape. The landscape is nothing but the system arrangement for a typical project. Meaning to say, everybody, as I said, will not be given access to the entire SAP system. Okay, especially when you're talking about the consultant in a project and an end user in the project. Now, what happens in the support environment where you are, my implementing partner has implemented SAP. All right, he wants to, he has also gone live on the SAP system. Yeah, but he's encountering some errors. He's facing some issues in the SAP system. So what does he do? He raises this particular request or he raises this particular issue. OK, and in the ticketing tool, we use certain methodology or we use certain systems for us to raise the issues. So what happens? Any project can use any of the ticketing tools or the support tools, whatever. Now, through the media, through the support tool medium, he lets the implementing team know about the issue. Now, after knowing the issue, the respective consultant, see the issue could pertain to the finance module, to the management accounting module, to the sales module, to the material, to the purchase module, to the human resources module, whatever. So it is up to the individual consultants or the individual module experts to pick up the issue and resolve whatever the end user is facing. All right. Now, once the consultant takes up the issue, he starts working on the solution. It is like you jotting down some important information on your system or maybe on a scratch pad and later coming back and working on the solution. Same thing. So you are working in a space provided to the consultant, which is nothing but a testing environment. All right. It is called as a sandbox or the development space or the development server. So the development server, what happens? The consultant creates the solution or works around the issue and develops the solution. Now, after developing the solution, how does the user who has raised this particular issue know that his issue has been resolved? So he will be informed. The consultant informs the end user by means of moving the data from the sandbox to the quality. From this environment to this environment, the data moves so that the end user is promptly reminded that his issue has been given a solution. Whether the solution meets the requirement or not, that is a different case. Okay. Now, so his solution has been attended to and he needs to check. Where does the end user check? He checks in the quality environment. So whatever solution has happened in this development server moves to the quality server through something called as a transport. This is a technical concept. What happens here is I have worked on a solution. I have developed a solution. I need to move the solution to this particular place, to the quality server. What do? I make use of something called as a transport to move the solution from the development or the sandbox environment to the quality environment. Clear? Are you getting a fair idea about what is happening? And who does this? Normally, it is the basis consultant, the basis people in the project. They are responsible for the transport of the data, for moving the data from one environment to another environment. Are you getting a faint idea about what is happening? Now what happens? Now if the solution is agreed upon by the end user, the solution moves from the quality space to the production server, which is actually the live server. The data moves from the quality server to the production server only and only when the end user says the solution is meeting my requirement and the system is working as it should. Then and only then the whatever is there in the quality server moves to the live server or to the production server, again, which is being managed by the basis consultants. So the solution moves from one environment to the other environment through a concept called as transport. Transport, it is called as a transport request. Transport request or transport requests. Okay. So this is the cycle. This completes the project life cycle. Is this what you expected from asking the last part of the project implementation? This probably you may not have a very clear picture, but I have done my best to make you understand as to how things really work in the SAP environment. I hope I made it as clear as possible to you people. Yeah, thanks for confirming that you have understood and this is what you expected. Very nice. So now let me just go through if I have completed everything as far as the project is concerned. This is a very interesting thing, the transport request and how you actually move the transports and what exactly is a transport request. Where probably I'm not very sure if I can talk to you about it now because it's a little technical. Probably it could be a lot more confusing rather than helping you out to understand the subject. So let me not get into it deeper now. And students, let me repeat, you have any doubts from any of the sessions, any number of times, please feel free to ask me. Absolutely no problem. Okay, it could be starting from the first session. No problem. You want me to repeat a few concepts? Absolutely fine. Not a problem. Okay, now. So have some people started reading has some people gone through the course content? People who have already received uh, the access, please spend some time. I think now that we have spent more than a week on this subject, it will be the right time for you to actually start reading the course content. And as I said, it's not necessary for you to understand each and every word, each and every letter as to whatever is there in the content. Okay. Now, the most important and probably, let me not use I think if I use the word complex, it is not advisable. Okay, but definitely this asset accounting is a very different subject, and the way it is handled in SAP, both in ECC and as well as HANA, it is something very different. Clear? So as far as the difference between the ECC and HANA is concerned, this asset accounting is one of the areas where there is some difference in the way ECC handles asset accounting and the way HANA is handling the same asset accounting. Clear? Now, so now we are starting out on a very interesting topic, probably from the learning perspective, lots and lots of new terminologies to be understood. All right. So let us just go through this. And students, if at all you want me to revise this asset accounting topic, I'll be more than happy to revise this starting from the first point. Absolutely, because this topic demands revision, not once, not twice, but n number of times. And every repetition will be new. Let me assure you that. Each time you read or I visit the topic, you will see that I'll be giving you lots and lots of new information. Clear? Yeah. Now let us go to the assets. So in this topic, probably we will be dealing with fixed assets. Your asset accounting basically deals with fixed assets. We don't deal with your current assets because they are taken care of in a different module altogether. In a module in the sense, the inventory. Your current assets is nothing but your cash, bank balance, your inventory, correct? So they are taken care of in the usual finance thing. But as far as the fixed assets is concerned, it is a uh, it is a module on which you need to definitely spend some time, and which may sound a little different from your normal fixed assets understanding. Conceptually, it is the same. Conceptually, see, it is no different. But the way SAP has uh, gone about implementing all the information as regards asset accounting is very different. Yeah. So basic life cycle of an asset. How does the asset accounting start in SAP? How did your financial accounting start? It started with you creating a company code. I'm talking about the consultant's role, right? After that, what did you do? Coming from the finance background, what is the first master data you created? You created the chart of accounts. As a finance consultant, you created a master structure, master GL account record called as the chart or the charts of accounts. So we have spoken about the charts of accounts in length. So I do not feel that I need to repeat. But if you still want me to repeat, I am more than happy. Not a problem. Clear? Just let me know in your Q&A section if you want me to repeat what is a chart of accounts. Now, similarly, what did you learn in your AP and AR? You also started the activities relating to AR and AP, starting with the individual master data, customer master data, vendor master data, and you saw the number of views also. 3 views of the customer master data, 3 views of the vendor master data. Correct. So similarly, when you talk about the asset life cycle or the assets, that also starts with creation of a asset master creation of the asset master data. Clear? So how does SAP look at asset account? So you create the asset master data. Now, after this, what happens? You have simply here in this step, what have you done? You have simply created, like you have created the, let us say, customer master data. But have you transacted with that customer? You have still not transacted. Same thing happens with the assets also. So you have simply created the master record for an asset which you are about to acquire, which you are going to purchase. So after you have created the master data, it is your asset acquisition process or your asset purchase process. Clear? So once when you purchase the assets, so let me also say you are dealing with fixed assets only. Asset accounting in SAP necessarily means fixed assets. It does not have to do anything with your current assets. Because current assets, they are taken care of in the normal finance module itself. Okay. But to handle the fixed assets, you require a special module called as the asset module. Clear? Now, you have the master data. You have acquired the asset. Now, what do you do once you purchase the asset? Based or as requirement from the company's law, you need to provide depreciation. Correct? You need to provide depreciation, right? Correct? Now, what do you do after this? Asset reclassification. Now what happens? To have the accurate information about your assets, what do you do? Now suppose 5 years ago, you have purchased a plant and machinery worth around, say, some 55 lakhs. Correct? Now today, after depreciation or whatever, you have the asset value at, say, 20 lakhs. Just an assumption. You have bought a plant and machinery worth 55 lakhs, and the book value, the current value for the same asset now in the market is 20 lakhs, or rather, as per your books, it is 20 lakhs. But as far as the market value of this asset is concerned, okay, the value is 25 lakhs. Now, how do you bring your asset back to that value now? This is called as your asset reclassification. You may have the process of reclassifying the assets. And finally, you have the asset scrap or retirement of asset. And as a reason, you may also have profit on sale of asset or loss. Once when you sell the asset after the expiry of the life of the asset, you may end up selling the asset. You may end up in a profit or a loss by the activity of the sale of the asset. So these are the necessary life cycle steps involved in your asset accounting. Whenever you talk about the asset module, you are going to talk about all these features in SAP. But how each of these steps is taken care of in SAP is a little different. A little different in the sense, not different from the procedural aspect. No, it has to very well follow the same methodology as that you follow in your accounting books, but the terms and the way asset handles each of the particular step is little different from your traditional accounts as far as the terminologies are concerned. Yeah, let us go back to the content. Create master record. You purchase the asset. You have the depreciation. So you have the return. This is your life cycle broadly. These are the 4 distinct steps as far as your asset accounting is concerned. So you have the life cycle. You first and foremost create a master record. Second, you have the process of buying the asset. bringing it into your company, and you start carrying out your asset accounting functionality. What is the first function? You provide depreciation at the end of every fixed period. Normally, it is the end of every month. So what do you remember? Or what topic does it take you back to? It takes you back to your vendor payments, automatic payment program, where you carry out the payments on a specific date, specific period. So there we assume the scenario where we release the payment on the 15th of every month and on the last day of every month to our vendors. And same thing, we spoke about the same concept as regards the dunning is also concerned to the customers. So at every fixed period, we are reminding the customers for their overdues. And so also, as far as your fixed assets is concerned, you carry out the depreciation function on a monthly basis. Normally, we do carry out the depreciation as of every month. And this depreciation run is also a scheduled program. Just like your automatic payment program, there is a specific program which takes care of carrying out the depreciation for the n number of assets. Can you see how challenging it is going to be? Now, let me go back. Now, if you see the fixed assets, I said you create the master data, correct? You classified your general ledger accounts by means of account groups, correct? You had the balance sheet, you had the profit and loss accounts grouped in one specific group. You had your vendor and customers group, account group, export and local, import and local. Remember? Similarly, you can also categorize your assets into land and building, so again, you may break up your assets in these particular categories: land and building, plant and machinery, fixtures and furnitures, vehicles, computers, whatever your implementing partner wants, you can create those many asset groups. And this is called as, in SAP, it is called as asset class or asset classes. Yeah. So the way you categorize your assets, your fixed assets, they are called as your asset classes, asset class or asset classes. Just like your vendor account groups, GL account groups, your customer account groups, same thing, you have a different assets are being classified as your asset classes. So SAP has provided these standard asset classes. SAP has inbuilt has already got these asset classes inbuilt. All right. Now, the most important thing, how does the asset accounting start talking to the finance model? How did the AP module start talking to the finance module? Through the reconciliation account. Same thing happens. Even in your asset accounting, the talking between the finance and the asset accounting module takes place through a concept called as, I think you're probably aware of this term, account determination. What is account determination? Your reconciliation account. Linking the finance module to any other module happens through your concept called as your account determination. If somebody asks you, what do you call for the integration between the finance and the other modules? The interviewer is simply expecting an answer, account determination. That is all. So if you answer as account determination, he will immediately know that you know the concept. You're conceptually aware of the term account determination. Clear? So I will stop talking for a couple of minutes. I'm ready to take your questions if you have any. Can dunning also be applied to AP? Very much yes. Dunning can be made applicable to your vendors also. Why? Now suppose you have rejected some purchases. Your vendor is supplying 100 kgs of raw materials. And after your quality check, he has sent you 100 kgs. You have also released the payment for 100 kgs. All right. Now, after your company carries out the quality check, it has found that you cannot use even 1 kg of the raw material. Low quality. So what do? You have sent back all the 100 kgs. Clear? Now what happens? Your vendor is liable to pay you because you have already made a payment for purchasing the 100 kgs within the time frame. But since you have returned all the 100 kgs, now your vendor is liable to return that payment. So you can also done for that particular payment. Suppose it is 1 month since you have returned the items. You can send a reminder to your vendor also. I hope the concept was clear. Am I clear in explaining as to why dunning can also be applied to your how can dunning be applied to your accounts payable? I hope I have answered your question. Yeah. So with this question, shall we break for lunch?
Yes, sir. Sure, sir. So students, we'll be taking a break now for lunch break. and be back by 2 p.m. for the next session of SAP. Thank you all. Thank you, sir.
Thank you, man.